Welcome to the Beyond the Deal podcast. I'm your host, Michael Wagman, and I am obsessed with personal growth and success. In this podcast, I interview extremely successful people, and sure, we're going to talk about deals, we're going to talk about numbers, but we also want to go deeper than that, and we want to get to the habits, the tips, the tricks, the things that lead to success in life and business. So let's get right into it. What was that first deal like, and how did it fuel everything that it's become?
When it started off, I was just simply looking for investments. I'd done a lot in the stock market. I traded options. I built crypto mining computers, flipped trailers. I was just looking for somewhere else to put my money. So a buddy from college pitched me on the idea of buying real estate, and I started researching it. Did super deep dive, went and read every real estate book I could find, and saw that stock market generally averages 8, 9, 10% returns. But with real estate, you make money in 4 different ways. As you know, it's cash flow, appreciation, and amortization. So when you add all of those up, even a basic single family house can get to 20, 30, 35% returns. And that was just mind blowing to me because I didn't think, again, stock market, you're at 10% if you're lucky. So that really caught the bug for me, was that financial side. And then the ability to leverage properties, play that financial arbitrage game, and then how much scale you could do when you actually start bringing in investors and developing, creating more value that way. So that's really what brought me into it.
And were you already living in Hawaii working for the developer when you started doing a flip, or were those two things happening simultaneously?
I was in the military when I started. So I was, active duty officer, and then in my nights and on the weekends was doing deals. I had done about 8 or 9 deals while I was still fully on active duty. Had a handful of flips done, a handful of multifamily portfolio or multifamily buildings stabilized, then went to work for this developer and actually started a couple development deals on my own while I was working for them. And it just got to the point where I didn't have time for my day job. I had so much traction and so many deals and projects in front of me that I left work on a Friday and Monday morning started on my business full time and just haven't looked back since.
So do you have any advice to people who maybe are still working that 9 to 5, who have always dreamed of getting into entrepreneurship or working for themselves, but maybe real estate is the avenue, maybe it's not, but you are somebody who has successfully transitioned out and had a successful side project while you were working full time? What would your advice be to those people?
Best thing I can do to say is just start. If you know where you want to end up, and that's looking at your long-term goal of where do you want to be in 5 or 10 years, what aspects of your life do you want, and then what do you need to do to make your life be like that in the future, that can give you some direction to start with now. But there's almost an infinite number of paths to get from where you are now to where you want to be in the future. And because of that, it's almost guaranteed that the first path you choose isn't going to be the right one. So it's not worth the time doing that analysis and trying to figure out the absolute perfect plan, because I guarantee it's going to change 100 times. So it doesn't matter really what that initial path is. It just matters that you start, because then you start figuring out what things don't work, which leads you closer to figuring out what things do work. And the safest way to do that is while you do still have a job. So if you are a W-2 person, start trialing things, because if you fail, which you're very likely going to, then you still have that stable income to rely on, and then you can just keep trying until you get traction.
What was your introduction to capital raising? How did you find yourself in this space?
Yeah, so it was kind of accidental. I was really lucky to be picked up by a large self-storage firm pretty much really early on in my career. I had no idea what capital raising was. I had a marketing degree. They originally hired me for marketing. And then really quickly into that role, they said, hey, you'd be good at investor relations. And I was like, well, I don't even know what that means. And so luckily I had a mentor there who really schooled me up on what it means and why investors invest and how these deals can change people's lives and their financial health, right? And so I just got lucky. I was at the right place in the right time in the right firm, and they taught me everything I needed to know. And then I grew from there and spent about 5 years as a full-time capital raiser and then branched off on my own.
And you said you had a mentor who identified that you would be very good at capital raising. What was that sort of transition like? How did you find, your first investors? How did those conversations go? What was that like for you?
Yeah, so it was obviously very scary to talk to investors the first time, especially when I didn't really feel confident in what I was talking about. And so before I started talking on the phone with investors and really raising that capital, I was mentored on, okay, here's the deal structure, here's why people invest, here's what an IRR is, all of the different things you have to think about when you don't come from a finance or real estate background. And so it was a big learning curve, but I really enjoyed it. I found it really intriguing that, oh my gosh, there's a whole nother world out here that people are investing in that I had never heard of or had no clue that this existed. And it just opened my eyes to wealth building and saw it through a different lens. And so when I was able to talk to investors, I really did take an educational approach. And I was really passionate about figuring out, okay, why are you looking to invest? Are you looking to grow your passive cash flow so you can then retire earlier? Or are you a high paid W-2 and you love your job, but you need those tax benefits? So I loved figuring out the pain points. I loved hearing people's stories. I loved educating them on this new world that I had just found out. And now I'm able to share that with them, right? So it really became fun for me. I'm very outgoing. I'm a big people person. And so having those conversations started to come naturally down the line after we got over the technicalities of what this all meant. And so finding investors was different and challenging. But I think the thing is, it doesn't matter who you're talking to. You could always potentially be raising capital, right? You meet someone on the airplane, or you go to the country club and you play golf with somebody. There's always people out there that have capital. They're looking to invest. And so once you just start talking about it and you're comfortable, going out in the open and sitting next to a stranger at the bar and saying, hey, here's what I do. What do you do? That kind of thing. It makes it a little bit easier. So it's just a fun thing to talk about.
Obviously, I'm in the healthcare space. I'm an orthopedic physical therapist. I've been one for, almost 23, 24 years now. And my passion, while I love serving people in healthcare, is also real estate. I've been a full-time real estate investor for 15 years, and people say, hey, how can you be a full-time real estate investor and have a W-2? Well, there's 24 hours in a day, and there's 168 hours in a week, and it's your responsibility to make the most of them, and I do. So I do consider myself a full-time real estate investor because I do put in, it's almost like having two full-time jobs, but both are fun in different ways. I have a wide range of real estate experience. I flipped over 125 single-family homes here in the Metro Detroit area. I've owned small multifamily and rentals here in the Metro Detroit area. I've since sold those. I'm focusing on bigger commercial projects as I've a GP and LP in various multifamily projects in the Metro Kansas City area. I really do like that area for various reasons. And again, my focus in the future is to continue to add value to people in the multifamily and commercial space, as I really enjoy connecting with people, networking, and attracting capital for various commercial projects.
Awesome. Okay. So much to unpack there. All right, let's go back to the beginning. Your
Sure.
work as a occupational physical therapist or orthopedic physical therapist, you said.
Right.
And
Right.
what is the motivation to start flipping houses? How did you get there?
That's a great question. So I can tell you exactly when that started, back in 2006. And it was actually, we're coming up on the 19th anniversary of that. My dad suddenly passed away. He was a business owner and he owned an engineering company. The company is still actually in business now. And ironically enough, future decisions need to be made in that business, and I'm being included in that just because I'm representing my mother, who is now the owner by death. It really turned the corner for me in thinking to myself, being a physical therapist is great because you can serve people, but what else is there in life, right? I had more of a burning desire to do more, and it's not necessarily a good or bad thing. I certainly didn't dislike what I was doing. I do like it. But there's other things in life, and you're here for such a short amount of time that I wanted to take advantage of all that life had to offer. And for me personally, that was real estate and doing as many things as I could do to not only further my financial future, but my family's for generations to come. So that's when I started in the flipping arena in mid-2007. And it was great for a while. I got in right as the market crashed. It was, you could buy houses for 50 cents on the dollar. It was great. But, in a flipping business, just like in a lot of businesses, you either had the houses but didn't have the money. You either had the money but the contractors. And we've all dealt with contractor issues in real estate, right? There was always an issue, and I found it very hard after a while to scale. Not that I wouldn't take advantage of a flip now if it didn't happen and it was a smoking good deal, but honestly, to build that business, that's not what I wanted to do after flipping so many homes. So that's how it was kind of like my pivot point that I thought to myself, okay, always be on the lookout for good opportunities, right? And when you say good opportunities in business, really that means great relationships with other potential business partners, because they can either lead you down the right road and the great path or not.
Absolutely. So you got in before the crash.
I did.
You were relatively unaffected and took that as the buying opportunity of a lifetime post-crash.
Yeah, yes.
And at your peak, what was the scale like? How many, because you did 125 flips, but you did them over the course of how many years? How many did you have going on at a time? And for background info, my background is as a flipper as well, and I found it extremely hard to scale. And I think I probably had 2 or 3 renovation projects at most going on at any given time.
I agree with you 100%. The most that I think we had going were 3 or 4 at a time. I think we did 21 was our highest in a given year. And again, these 125 flips are over the course of approximately 10 plus years too. So I don't want people to think I did 125 flips in a year or two. That is not the case. And they were not nationwide either. They were in my Metro Detroit market here in Michigan. So it was very local because of course we wanted to have a pulse on the deal. But I agree with you 100%, Michael. It was really hard to scale that particular business in real estate. And I thought to myself, look, you're smart, you're educated, you can educate yourself. There's obviously other avenues in real estate that you can pursue. There's not just one way or one path to what you want to achieve. So, and that's when I pivoted obviously into the multifamily and commercial space.
Hey, really quick, I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there.
Well, let's see. I got started investing in real estate back in January of 2008. I was 21, fresh out of college, newly married, just actually moved from Tennessee to Southern Alabama to start what I thought was going to be a long-standing career as an aircraft technician. Then my dad calls me up, tells me that him and my mom are getting ready to start flipping houses. Literally, the rest is history. So I never actually flipped a house, but that conversation just got me interested in the industry, what it could mean for me to jump in. So the wife and I jumped in headfirst into wholesaling. We tried that for about 6 months. Didn't close a single deal. Realized that I just didn't want to be on the transactional side of real estate. I wanted the benefits of owning it. So we pivoted the same year in 2018, bought our first real estate investment, which was a fourplex. Shoot, we were excited about that. We were going to house hack it, and then anything that could have gone wrong went wrong. We lost about $60,000 on that investment. But you always learn a lot of valuable lessons when you lose some money. So maybe we can talk about those lessons in a minute. But after going through the school of hard knocks, it was around February of 2019, we made the decision that we were going to focus solely on commercial real estate through multifamily, and more specifically syndicate. And I'm negative $60K in the hole, so not like I've got my own money to go dive and dump into some deals. So how can I get into the business maybe a little bit more creatively? And syndication was that for me. So I hired a mentor immediately. It's probably the best investment decision I've ever made. And I think the reason for it was just that it was a very personal relationship, to the point that we knew each other's wives, kids, broke bread at each other's houses. And he actually sold me my first deal at a $450,000 discount just to help me break into the business. So I learned a ton underneath him. I was underneath him for about 2 years. I met my 2 business partners during that time frame. And then we bought our first deal that he sold us in December of 2020, which was a 42-unit local to where we were at in Alabama. And then fast forward to today, it's been just a little over 4 years since then. Now we've got about 900 units, right around 75 million. We've raised a total of 27 million in equity from investors. To buy those deals, we vertically integrated a couple of times. We've got our own property management company and our own construction company. Matter of fact, as of last week, we're fully vertically integrated with all of our properties. So we self-manage and self-handle all maintenance and CapEx and renovations with both of those companies. Got about 23-ish full-time employees between those 2 companies. We currently have about 750 multifamily units spread across A, B, and C class. We have 150 to 160 RV park pads between 2 different assets. And then last year, we actually bought a business, a little pecan business that has nothing to do with real estate. The one and only deal that we haven't syndicated So the three of us actually own the business outright. And then, as you mentioned earlier, I've got my own podcast called Creative Capital. We've been running now for, since April of 2020. We've got over 2 million some odd downloads, 370 or 380 episodes. And then the last thing I'll say is in the summer of 22, I was finally making enough money to quit my day job. And then at age 25, you're not really looking to sit on the beach and do nothing for the rest of your life. So we've done a couple of vertical integrations. That's cool. But I really wanted to know what could be next. So I thought, well, what about a horizontal integration? What would that look like? So what would it look like effectively for us to help other people? And then by so doing, maybe we grow faster, more efficiently, and then just create real win-win situations for folks. So I looked inwardly at my own experience that I had with my mentor, decided to start the mastermind that we did in June of 2022, building the same personal one-on-one relationship with every student. And then today we've helped a total of about 100 people over the last 2.5 years. They've closed over 2,000 doors, raised over 100 million in equity. They got roughly another 1,200 under contract. Even in the last 2 years when people said interest rates were too high and cap rates were too low. So it's been a lot of fun. Been up to a lot over the last 7 years.
And can you sort of share a pivotal experience or a defining moment that kind of led you into the full-time real estate thing?
It's funny. I did it because I had to, or I wanted to because I had to. And the pivotal experience, and you and I have talked about this, was really a series of events that first, I would say, completely shattered me, and then led to what has been several of the most growth-oriented, change-related years of my life. So in 2018, we found out that my mother-in-law had cancer, and we lost her a week later. And 13 months after that, we lost my father-in-law to cancer. And 13 months after that, my dad, who was only 66 at the time, had a massive stroke and passed away. And those three events completely shattered me and also caused me a lot of reflection. My dad, being 66, was 23 years older than I was at the time. I was 43. And I looked up and wondered, wow, if there's only 20 more of these rotations around the sun, that's 20 more summers, 20 more Christmases, 20 more birthdays, 20 more anniversaries, whatever. That's not that much. And I realized that there were a lot of my own dreams that I had put on hold for whatever reason, not giving myself permission, maybe not believing that I could do it. But also I'd spent a lot of time building a business and not being home with my family. And I didn't want the next 20 years to look like that. So I made the decision to sell the business and trying to figure out what the next 20 years would look like. And I think I've figured that out now. That can always change. But those were the sets of circumstances that forced me to become different.
So in the wake of all that grief and loss, was there any sort of habits or, how did you overcome that? What did you do in your life to move on from that loss?
Well, initially I didn't. So, the first part was just, and anybody that's gone through a significant loss, divorce, death, loss of a job, whatever, I like to say, like, the impact point of that, which really and kind of the straw that broke me, was my dad's death. And for several months, I didn't even want to live. And in fact, in a few days, I'll be sharing this story with a church group. But I can remember very distinctly sitting in my truck, looking at the gun that was in the console of the truck, and just thinking it would be so easy just to not do this anymore. And I don't know that I ever wanted to die, but I didn't want to live anymore. I had completely lost happiness and joy, and none of it seemed worth it. And there were a series of things that happened after that to help, but initially, I didn't get out of bed. I really lost all control on who I was, what I was doing, and I just didn't care. So, like, the first part was just not pretty. There were never really any, like, super destructive habits or anything, but I also just stopped really caring. I didn't really take great care of myself, put on a lot of weight, spent probably an inordinate amount of time, watching movies online and stuff. I was just lost. And there are some very specific things that have happened in the last few years to help with that recovery that we can certainly go into. But, the first part of it was just a complete and utter mess. And if there's anyone listening who's there right now, I would just say, that's okay. It's okay to be broken. And yeah, even the things that you're doing just to cope, it's okay. You're just doing the best that you can. And I would also add there's hope for it to be a lot better. And your life can change very rapidly. But from where you're at right now, you're just broken and you just need to heal.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.